But what is going on, guys? Luke here today, and I think we all know that a once-in-a-lifetime event is here. Fortunes are made during crashes, and by the end of this video, you will have the simple formula to profit huge from these once-in-a-lifetime events like we're in right now. But there is a big warning that comes with this. I mean, you can turn this once-in-a-lifetime event into a huge zero for you as well, so I will tell you exactly how to avoid that too. And if you get any value out of this at all, make sure you like the video, and remember to do that for all the creatives you like, as that is how the YouTube algorithm works. And the quicker you do it, the more you help that creator. So, let's, tickle that algorithm just a little bit and jump into this. So here are some of the biggest mistakes investors are making right now today. Number one, you are making investing decisions because of emotions. If you have that sinking feeling when you see red day after red day, that's exactly what I'm talking about. Number two, you still have not done a full due diligence on the stocks you own, which leads me to mistake number three. You are jumping from video to video on YouTube hoping someone will give you the right answer to should you buy or sell and at what price targets and all that stuff. This is a recipe for destruction in your portfolio. But there is a solution to avoid that destruction, and it's for everyone. I mean, people with $1,000 accounts and seven-figure accounts as well, as those are all the groups represented in the over 1,000 members who are part of the Market Insiders private group, which is the ultimate wealth building community full of people like you changing their financial futures. And this sale ends in just a few days to lock in your discount forever. We have over 100 different tutorials and lessons for you to take to avoid those mistakes, learn how to plan and do evaluation, and it's also where we have lessons on mastering your money, building up passive income, and retiring early and becoming financial independent, and we even have a real estate course in development right now. And you're not only helping yourself and your family build a better future, but you are also helping others in need, as half of everything right off the top goes to charity. So there is a lot of uncertainty in the market right now, with some predicting the mother of all crashes is just beginning and the market will go to zero and all kinds of stuff like that. But here's why I am so pumped to see red day after red day. Heck, it's amazing how new members join my group and then admit they don't understand why the group is hopping with excitement on red days. And then when the market has a big green day or two, everyone is kind of let down and kind of moping around. But then a few weeks later, after they dive the materials, get on the Q&As and participate, they find themselves excited on red and angry at the green days just like the rest of us. So what kind of causes the flip? I mean, how the heck does that happen? Well, it's a simple mindset shift to understand that crashes happen once in a decade or so, and when they do, they are incredible opportunities to build real long-term wealth. I don't care what the media says or YouTube or anyone else. Look at the facts. Every US stock market crash has been a golden opportunity to buy great stocks on super discount. Every single time. Every single time, the same people who follow the media or the news say stocks will never recover because this time is different. They say that every single time. And every single time they are wrong. Every single time. And then there are stocks that thrive during recessions after the initial crash. Apple and Amazon returned to their previous all-time highs before the end of the Great Recession. And stocks like Netflix, I know they're down now, but back then, during that time, they thrived the entire time. And the classic old man stocks like Coke thrived during that time too. It's not like every stock was a loser. But I honestly don't care if my stocks are losers in the short term, and as a matter of fact, I love recessions and crashes, and let me explain why with a simple exercise. Raise your hand out there if you wish you would have bought shares of Apple at $60, given that's well over $100 today. Okay, well, what about $3 per share? If that's still not enticing you, what about 30 cents per share? You could have bought Apple at all three of those prices during the past 3 crashes and recessions we had here in the US. Great companies with great management teams that have great balance sheets always thrive over the long run, despite the doom and gloom narrative that persists during those down times. So for me, I view a crash as a good thing for me as an investor because I can add shares cheaper than I should be able to on a great business. And don't worry, I hear you now, and you are right. You will probably be down in the short term because nobody can time the bottom. But you just raised your hand saying you wish you could have bought shares of Apple at those prices. And if you did buy those shares at those prices, you were down in the short term. You cannot have the gain of owning great stocks at those prices if you are not willing to take the short-term pain. So all you need to do to take that pain and get that gain is to simply take these 3 steps we are covering today and apply them. Then you will not be sitting up at night worried about your money, and instead you will be sitting up at night excited about the opportunity in front of you to make a lot of money over the long run. So step number 1 is figuring out which stocks you want to buy and hold long term. And seriously, just play out the biggest, baddest scenarios you can think of. I mean, if the market drops another 30%, what stocks would you want to buy? Identify those stocks and then start doing your due diligence on each stock. And don't try to use the YouTube cheat code, guys, and just watch a couple of videos. I mean, actually dive the financials, listen to the earnings calls, review the business models, and all the other things that are encompassed in doing due diligence. So step number 2 is to create a plan and buy point for each one of those stocks. All right, now you know what you want to buy. Now figure out your buy points. Remember, you cannot time the market, so don't even bother. This is where finding out that valuation is key to your investing. Once you know what fair value is, then you can create those price targets you want to buy at, so that way you know you're not overpaying and you know when stocks are actually on a discount or if they actually need to fall further. Step number 3 is to just relax and stay laser focused during the crash. Don't make the mistake of watching the news or social media or anything else, and if you do, don't fall for the hype or the fear. Use your brain and analyze, and absolutely avoid the chat rooms in the comment section and all the other noise. You already have a plan laid out. It's time to focus on that and kind of let everyone else freak out and buy into all that stuff. Also, here is your big warning right here before we get to step number 4. It just kind of fits right here. Do not make the mistake of selling in a crash scenario. I mean, is Google or Tesla or Apple all of a sudden not great companies just because the stock is beaten up? I mean, I don't really think they are. I mean, I guess that's kind of an opinion, but I don't really think they're all of a sudden bad companies because the stock is beaten up. And if you do sell, it actually does 2 different things. 1, it creates a taxable event, and I don't want to pay taxes on a stock that is a long-term hold and sell a company that I personally believe in long-term. And 2, I am now trying to time the market, which no one can do. And you want to talk about stressful. It is much more fun to try and pick up great stocks on a discount than it is to unload a portfolio full of great stocks, potentially have a massive tax bill in some cases, and then try to time the market to get back into the investments that I already owned in the first place that I want again. In the end, you would have statistically ended up worse off than if you would have just held through it all and basically DCA'd into those stocks. If you are holding high quality stocks, this is just an opportunity for you to add more shares on the cheap. And step number 4 is to simply execute your plan. You have done the work. You have put in the time, and now it's time to start buying. And guess what? Since no one can time the market, you won't guess the bottom unless you get lucky. That's why you buy in kind of tranches, and you should expect to lose money in the short term. And if that bothers you, you are thinking like a short-term trader, and I honestly cannot help you there. You have the wrong mindset to be a long-term investor. Instead, look at it as if you got a discount over the valuation you placed on the stock, and if it goes down further, then you are getting additional discounts. Crashes are where fortunes are made in the end, and the question becomes, will you do what is necessary to make yours? Don't know how to get a price target or analyze a stock, and you want a step-by-step process to do that and much more? Don't forget to lock in your discounted membership price using the link in the description or the pinned comment to join the private group. And remember, that discount ends forever in just a few days. And click this video right here for even more stocks I've been buying during this downturn. So thanks for watching, and we'll see you in the next one.